JSE looks set to open to mostly positive global sentiments amid mixed news from the world's largest retailers, while focus remains on the U.S. Federal Reserve announcement that's expected later this week. Let's talk about the latest market moves. We're joined by Thabiso Mmathuba, investment analyst at FNB, to talk us through the latest market news. Thank you very much. Good morning to you. So how are we looking at early trade?
So far the JSE has kicked off Tuesday's trading session on a very positive note this morning. This comes obviously as it faces, optimistic Asian markets, which were supported by an uptick in Chinese tech stocks. Investors, however, will continue to remain a little bit cautious. This obviously comes ahead of a looming interest rate hike by the U.S. Federal Reserve Bank tomorrow evening. So this is largely echoed by, global futures markets, which remains broadly varied between the red and the green. And then just in terms of the rand, we're seeing the local unit firming against most major currencies. This is obviously despite yesterday's announcement by Eskom on the possible re-implementation of load shedding. The rand is currently trading around the 16 rand and 74 cents mark to the US dollar. And then in terms of gold prices, these seem to be driven higher by a softer US dollar, although this was kept within a narrow range as market participants remain sort of cautious ahead of, another rate hike by the US Fed.
Let's pick up on news from Eskom. So private energy investments are expected to start flooding in after the president's announcement yesterday. How could this possibly add to our local economy?
Yeah, so President Ramaphosa's energy plan that was announced last night to end load shedding and, just general energy insecurity should open a floodgate of private investments into the energy sector. The news was well received and, it will now be sort of easier for private companies to build power plants and pay households and businesses in general to produce electricity from solar panels. So the measures announced last night are expected to add about 7,000 megawatts of capacity within the 3 months. And in a year, or rather in 18 months' time, this should add about 9,700 megawatts of capacity, meaning that the amount of available generation capacity could almost double. So while it is still early to quantify the impact that this will have on the local economy, I mean, this is certainly good news for the energy sector and for economic growth prospects, as it will obviously go a long way in terms of boosting investor sentiment and also in allowing private investments in electricity generation to advance to higher levels.
Kumba Iron Ore has slashed its interim dividend by almost 2/3 for its half year to end June after its profits fell by over 50%. Talk us through that development.
Yeah, so this wasn't, surprising from Kumba Iron Ore. So obviously this comes after the iron ore producer lowered earnings before interest and taxes from, for the interim period. This was obviously due to a decline in iron ore production and lower realized prices. So earlier last week, we saw that the company reported that their production for the first half fell about 13%. This was due to adverse weather conditions, certain logistics challenges, as well as safety reset initiatives, which have impacted operations, unfortunately. So as you've mentioned, they did slash the interim dividend to about 28 rand and 70 cents per share from 72 rand and 70 cents per share last year, which was, also not completely unexpected. So we know that lower iron ore prices, or rather iron ore prices were lower compared to the same period last year, and also higher costs over the period likely resulted in earnings decline over the period.
Woolworths has posted its trading update. How did they fare?
Yeah, so we saw this morning that they released a trading update for the 52 weeks ended 26th June. Overall turnover and concession sales grew 2.6%. This was ahead of market expectations for a growth of 2%, so this was quite positive. They reported their online sales, growth of about 16.4%. This now contributes about 12.4% to the group's total turnover, as well as concession sales over the year. So, trade, obviously, during the first half of the year was severely impacted by extended lockdowns in Australia and to a lesser extent by the civil unrest in South Africa, which makes full year trading results sort of non-comparable to that of the prior period. So trade, however, during the second half of the year, showed an improved run rate over the first half across all its businesses, with group turnover and concession sales growing by about 5% and by about 6% in constant currency terms. So overall, a decent performance by the retailer, which managed to exceed top-line growth expectations despite a very challenging macro backdrop.
Pick n Pay also released its trading update. Was their performance decent?
Yeah, that performance was quite positive also, Dudu. The South African segment grew sales by 10.5%, which was ahead of market expectations. They saw like-for-like sales growth of 8.3%, and then the rest of Africa segment increased sales by 18% and by 9.5% in constant currency terms. And then in terms of their liquor sales for the period, that was up 17%, and the clothing division increased sales by 17.1%. But then just to mention, in common with other retailers in the sector, the group is experiencing, quite a lot of operating cost pressures, including material increases in rates, electricity, as well as fuel costs. We know that the July 2021 riots have also resulted in a very significant increases in the cost of insurance and security for most retailers. So in terms of outlook, the group expects the consumer environment to remain challenging, obviously as a result of globally rising inflation and interest rates. But overall, again, a very positive update. We're seeing that the share price is up 1.6%, so it looks like the market does approve of those results as well.
Investment analyst at FNB Thabiso Mamathuba. Thank you, ma'am.